Good morning, good afternoon, good night, wherever you are tuned in from. Welcome to the BitLab Academy daily live stream. My name is Kelly Kellam. Welcome to the show. We have been doing 10:30 a.m. Eastern Standard Time, Monday through Friday. But, you know, yesterday on my birthday, which was wonderful, had a wonderful stream with a lot of great guests that came on. Also had a wonderful dinner with my wife, made some duck, got a little bougie, had just a wonderful night. So shout out to anybody that's ever had a birthday. No, I just wanted to say I really liked having that small amount of extra time yesterday. So we're going to be doing this show starting at 10 a.m. moving forward. It's going to be going from 10 a.m. to 11:30 a.m. Eastern Standard Time, Monday through Friday. So I just wanted to make that acknowledgement, shout that out, let everybody know what's going on there. And just how are you all doing? How are you feeling? The market, you know, took a little bit of a tank yesterday, but had you been watching the stream, had you been paying attention to things I've been breaking down on the charts here, I have been calling for a specific level that we are literally right now just dancing right in that area. So the struggle with charts when you're feeling lost, when you're feeling like, you know, if you buy, it drops, or if you sell, it goes up. We have to have a plan, we have to have a strategy, and we have to have patience. So we're going to go right into a bunch of charts today. Then we've got a wonderful guest coming on in about 20 minutes, 15 minutes or so. So I'm excited to have him come on. But before we do that, let's go ahead and make sure everybody, if you're here in chat, it's early on the show because this is the first time we've started this early. Hit that like button, hit that subscribe button, ding the bell. Let's get that percentage up. We get about a little over 50% of the people that tune in, and I see that they tune in regularly, have not even subscribed to the show. Subscribe, come and join our community, be a part of the family here as we grow and we share our experiences together and we bridge that gap from beginner to pro. So that being said, everybody, welcome to the BitLab Academy daily live stream. Again, my name's Kelly Kellam, and I'm just happy to have you here. Let's dominate this market. All right, so we're going to jump right in first, right here, looking at what's going on. I shared this tweet yesterday. This is a tweet from Paranoid Bull, and there's all this speculation of, you know, within the ignorant halls of Congress and the Senate, with the majority of people not really knowing what's going on with the markets. And they talk about how, you know, bad crypto is, how, you know, insolvent exchanges are. Well, this right here, this is relating to traditional banks. So we can see that there's a lot of basically all these things that they're sort of, you know, if you're in a glass house, you know, you don't throw a stone if you're in a glass house. This is the U.S. government talking about how unsafe crypto is, where they're ignoring the fact of everything that's going on within the traditional finance ecosystem. This exemplifies it beautifully here, showing you know, essentially unrealized losses in this case in Silvergate Bank, SVB. There's so many different things going on right now in the market. And I was on a couple different spaces yesterday. Somebody asked me, do I think that Silvergate was a catalyst for this drop? Well, on the one hand, maybe, but this has been something that's been brewing within the space for the last about 2 months at least, where this was in the awareness of the people, but and I forget who said it. I was on several spaces yesterday. The fact that the Silvergate is closing up shop, okay, the market absorbed that initially when that happened, but what we also have to contend with is the knowledge that by them closing up shop, they have a lot of liabilities they have to take care of. They have to cover basically closing out their businesses, closing out the agreements they have. And also with that, they're going to have to liquidate or sell, offload some of the investments that they are holding. And if it's Silvergate Bank, then there's got to be some sort of assumption that there's a good amount of crypto that they're holding as well. So there's, you know, some offloading there, as well as the U.S. government having moved, I don't remember the total, but it was a ridiculously high number of coins from the identified wallet addresses that have been identified from the coin seizures that the U.S. government has done in the last year or two. And we've been seeing a lot of basically inflows onto exchange from those wallet addresses, which whether it's a speculative pressure for bearishness, or if they're actually not only moving them onto Coinbase and selling. Either way, we've seen the price fall. But what do we do here at BitLab Academy? What do we want to do when we are here in the community, when we want to invest or trade any of these assets? We're not just looking at all the news, and we can look at the charts and figure this out. Now, the news does give us a good indication of when we want to know why things are happening. We can kind of go and look at all those fundamentals. But as I have pointed out, time and time again over the last week and a half, 2 weeks plus, see this golden box right here? This golden box is outlining exactly where I was saying I'm feeling like this price action. I'm going to mute a bunch of the indicators here. We're going to look just at price action because of this sort of large push up that we had, large momentum push up, smaller momentum push up into this zone right here, which is the previous in this local region, local high, which is the $25,200. Price lost momentum going into this level. And as this happened, we started breaking down. I was basically, I don't want to say calling for, I was seeing on the charts that there's a high likelihood the price was going to pull back into where this box, this price level is, which is closing that CME gap. And if we come over here and look, I think I have it on this chart right here. This is a CME gap. We can see right here, we have this gap that was from this very fast push up that we had in early January. This is about January 13th. And we've been talking about the CME gap at that $19,800, $19,900, $20,000 range. And look at this, we've cleared it. Does this mean we're out of the woods? No, it doesn't necessarily mean we've closed this. We're going to go back to moonshot. But what I'm trying to illustrate here, and what I want everybody to recognize, is we can utilize the charts by basically drawing a map for what we think possibilities are going to be for the downside and for the upside. And we know that CME gaps tend to get filled more regularly than not. It's not, I think, Prepper Crypto, one of the people on the team here at Hit Network, did a chart where he broke down every CME gap that was able to be recognized on Bitcoin in the history of Bitcoin from when CME futures started with Bitcoin. And it was, I can't remember the exact number, but it was around the 88 to 92% level hit rate for price moving back to those levels to close those gaps. And so we could see this, we could have seen ahead of time that this was a likelihood to happen. And, this is exactly what happened. We lost this level. Price came down into this zone. So we got a lot to talk about today. We're gonna be going over some charts. I want to make sure. Let's see. Yeah. So we're gonna jump right in. It looks like our illustrious, wonderful guest is here. So just wait 1 second for me, my guest friend. I don't want them to know who you are yet. I just want to make sure. Okay. I just want to make sure the Zoom is all set up for the share. Where is guest cam? 1 second. All right, so here we are. We got a wonderful guest. This is Mr. Bill Noble. You're going to see him in just a moment. I'd like to draw this out and make it very captivating here. I just wasn't able to do this before he was in. There we go. So you are in the zone. You are doing. We were able to do the podcast yesterday on Crypto Spaces. I can't tell you how much I appreciated chatting with you. How you feeling? What are you seeing? What are you doing? Let's make sure your mics works and all that kind of stuff, and we'll get this going.
Okay, checking. Can you hear me?
Yeah, all good. So everybody, this is Mr. Bill Noble, and I'll let you tell you all about himself, and he's going to bring some magic and a new perspective on the markets. This guy's been in the market since before I was able to ride a bike, and he can drop some wisdom. So over to you, Mr. Bill.
Okay, thank you. So Bill Noble started in the market as an 18-year-old summer intern in 1990 when Iraq invaded Kuwait. There was so much chaos on the trading desk I was working on that I picked up a chart book, and I've been sort of the disaster chart guy ever since, like the dot-com crash at Morgan Stanley, 2008 at Goldman, and then crypto 4 years ago when I got in. it's a natural fit because there's a disaster every day in crypto. It feels like up or down. All right. So if you want to get into today, the first thing we got to ask ourselves is this a repeat of 2008 with banks failing? Okay. My answer is no. Is it the big short? No. In 08, it was the big short. Everybody knew mortgage-backed securities were going to blow up, at least on the institutional side, but nobody had any idea what that would do to the stock market or how bad it would be. So it was just like big fog, big unknown. These days, it's like, oh, well, retail's going to do the big short, and we're all going to short stocks and short banks. And you know what? That never works. So when retail and equities get bearish, you look to go the other way. Now, the Fed has kind of wrecked the labor market. Year over year, layoffs are way up. It hasn't showed up in the data yet, but unemployment can be a lagging indicator. So if you look at what's going on this morning, let's try this. I talked about raising capital like a week ago, or I've been talking about that. Now it's actually time to think about, hey, where could we deploy capital? So start with a disclaimer, right? Worst case scenario in Bitcoin is 14K. You're going to hear people calling for 14 or 11K, just like you heard people calling for higher levels when it was at 24. So how can we think positive, or better yet, is there a technical case to think positive? Now, let's give it to you. I'll give you an executive summary. Did you notice yesterday that the dollar was down? Normally the dollar goes up when everyone's upset. Dollar was down. Gold was up yesterday despite crypto cascading lower. So let me ask you this. What happens if, 20K in Bitcoin and 1420 in ETH, the two most famous levels in the history of crypto TA, right? Those are the 2017 highs. What happens if somehow, some way, those levels wind up holding? Because after all, is anyone bullish this morning? Anyone? Okay, me too.
But
So
I'm looking long term though.
Right. Well, I'm wondering. I mean, yeah, you can have a crypto debacle next week. You are right about Silvergate. I don't know if it's Silvergate unwinding assets or exchanges panicking that they won't be able to get all of their depositors' funds out of Silvergate, right? But that was what you should have been telling
the
people.
Ethereum, the ridiculous, just speculative, just hit piece from the New York Attorney General regarding Ethereum and
Yeah.
It's all this is just nonsense. Yeah.
I mean, look, just because lawyers can write a brief and file a lawsuit doesn't mean it's true and doesn't mean they'll win an argument, right? Now, one other way to look at crypto is like this, because again, we all know what can happen on the downside, but let's think about it. What did they throw at crypto? Gensler went to court, right? XRP got to have its star witness. They got laughed out of court on Grayscale. And then, when that didn't work, they had the New York Attorney General make up a fantasy lawsuit. Biden wants to tax everything on a budget that'll never get through Congress. Like, they threw everything at crypto but the kitchen sink, and Bitcoin's still at 20K. Now, can something terrible happen? Can it go to 14? I think everybody in crypto knows that it could be a disaster. But if you start thinking about where you want to be, maybe at the middle point of March, or at the end of March, or even at the end of June, like I think that's like long term in crypto.
Yeah.
We're in the opportunity zone, right? Now, if you want to see some charts, I got that. All right. But
yeah, we can definitely break down some charts, what you're seeing. I know the community would love that. And everybody, if you're not following Bill, you definitely check him out. And I'll pull up your Twitter page in a bit after you've done some stuff. He's a force to be reckoned with. He's got a wonderful and unique outlook on the markets, blending that traditional side as well as understanding. I mean, even on I don't know how much you want to go into it now, but I was kind of blown away with the basically that what you brought up yesterday on the Crypto Answered podcast, the spaces that we did. And you were talking about where I think some people don't understand how some of these things affect it. You know, when we were talking about the eclipse coming, and also looking at what's happening with some sort of astrological stuff, which some people think is nonsense. But you know what? Anything that I could see regularly with historical back analysis that has a strong correlation to certain things happening over hundreds of years, there's something to be said there that at least you should have an open mind. So if you wanted to bring that up at all, I thought that was really interesting. Because it definitely does have an impact on what's happening in the markets.
Okay, so good. Thank you for letting me bring that up. The the astrology work is really like cycle work, looking back in time from William Gann. That's what the decorations are. William Gann was a technical analyst that charted the market by hand and made $50 million back in 1929 and 1932, which is obviously a lot of money for the day. Okay, so let's talk about how he looked at the market. He liked 10 and 20-year cycles. So let's go back and look at all the years ending in 3, like 2013, 2003, etc. And then let's look at the March full moons and see what happened. Well, in 1983, there was a big Fed rate hike that scared the markets. In 1993, India devalued its currency by 20%. In 2003, March, we had the invasion of Iraq. And in March of 2013, you had a government shutdown over the budget. So when we were on the show, I was talking to my audience about, hey, you got to watch out around the full moon. And then here we are watching out around the full moon. Now, the next level is the big eclipse, the solar eclipse in April. Bottom line is, in Gann work, eclipses can wreak havoc. This particular type of eclipse is rare. It's called the hybrid eclipse. If you look up at the sky, it can look like a ring of fire around the moon. So there have not been that many of these, right? Only like 3 or 4 since I've actually been in the market. Now, if you go back to like 1812 or 1816, I'm not going to bore you with the history of the 1800s, but here's what is a thread that weaves through all the occurrences. Tightening cycles that creates panics. Dollar crises, dollar down move. Biggest one was 1986 when oil crashed and the dollar went with it. All the ones in the 1800s involved gold as it related to the dollar as paper money. Notice dollar index down this morning. Notice dollar index down yesterday, right? Interesting that people may be like, oh my God, Silvergate over here. But the real trade, which is always the case, like if you go back in legacy, right? Like this is a quick digression. In 2010 and 2011, everybody was worried about Portugal, Italy, Greece, and Spain being able to pay their bills. They got all bearish, and what did they miss? Facebook, Apple, Amazon, Netflix, and Google. They've been buying that stuff when everybody was selling life-changing money. So everybody's like, oh my God, Silvergate, when people should be like, hey, what happens if the dollar tops and starts trending lower aggressively? That means gold, which is up today. And that means Bitcoin and Ethereum can eventually find their footing, even if there is some kind of grand final panic puke. Nobody's looking at it this morning and going, because a lot of technical guys have covered their shorts, right? I don't blame them. I think it's time to deploy capital, because the net from the astrology work is, okay, we had the full moon debacle. And then from the eclipse, right, you either have a panic that affects stocks, which everyone expects, or you have a dollar down move, which nobody expects. And in research, you get paid for imagination, right? You get paid to see it before everyone else does. So if everyone's given up the ship in crypto and Bitcoin, now is not the time to be doing that. It's time to start thinking about getting involved.
No, I really like that. Mark Yusko says it best. I think I even mentioned this last night on the podcast, where, with any other sort of product or purchasable commodity in the, around the world, whether it's dresses that go on sale or there's a big shoe sale, 50% off, people line up around the block to get those discount prices. And when you have something, what's really interesting to me, when you have an asset class, like I'm not even gonna say Bitcoin or crypto, but blockchain, and then all of the assets that are there within the blockchain ecosystem. What's amazing to me, and this is one of the reasons why I want to do a show like this, and I appreciate the work that you've been doing with the different content you put out. And there's a lot of us out here doing this because there's a lot of and I don't mean this in a negative way. There's a lot of sort of understood and necessary ignorance about Bitcoin, blockchain, the crypto ecosystem. And it seems like it's so out of touch to somebody when they first come in. It seems like, something from a different language. But what's interesting is once people start diving into this, it's the most it's the most transparent form of asset class that you can have, because rather than waiting on quarterly P&Ls, balance sheets, earnings reports, we could go on chain, for instance, with Bitcoin, and I can basically see real time, as fast as blocks are being printed, who's moving money, when, where, the net exchange flow, the short-term behavior versus long-term. And we can really understand what's going on within the ecosystem on a real level that's immediately transparent. And so there's so much more transparency with this, and so much, this conversation could go on for an hour about this, the supply dynamics versus the adoption curve that's coming in. That when I see these markets going red, 5 years ago, it just made me want to jump through a window because I made such a stupid decision. I've been in, with crypto long enough now that when I see red, I already have the targets mapped out to the downside when it is going there. And when it goes further red, sometimes, 2022 is a year that I think caught a lot of people off guard, humbled a lot of analysts. That 100K didn't get met, and it's made us better because now we reevaluate, looking at the data, seeing that we're in this very different general global economic context, that even the tried and true global government economists, they're still struggling because they're trying to look at historical data as to if we see this sort of yield inversion, or we see inflation hit this number, there's no real playbook really right now on how to tackle that, because a lot of this stuff is also out of whack from the global economic shutdown in 2020 that still is unwinding. And also some of that on its own is settling itself as the supply chain comes back online. And so how would you say, being in the markets as long as you have and understanding this on a very deep level, we got the jobs number that came out today, but where are you seeing in 2023? Are you feeling like it's going to be a very choppy year because of this back and forth, very data dependent driven market right now with this uncertainty? Or do you feel like we'll get sort of like a 2019 sort of pre-halving pump pullback and then onto the real continuation of the bull market?
Okay, a lot of good questions. So I'm not a data dependent guy because the data at face value is either manipulated, lagging, or wrong. Okay. So inflation data could come out strong, but nobody has noticed that grains and wheat have been like crashing, right? You have to get ahead of the data. All right. The Fed has done a whole bunch of rate hikes, and the Fed has to talk tough because that's their job. But at the end of the day, they know that if they break the system, they can't print their way out of it like they did in 2008 and COVID, right? Inflation is still like an underlying threat. So if they go too far and break it, they can't save it with the printing press, so they can't break it. And that's why the dollar is down. Now, back to 2008, back to the cosmic view of blockchain. The way this is like 2008 in my mind is this is why Satoshi wrote the white paper. It came out in 2009, right? If there's another crisis, we need an alternative. Okay, everybody, well, here's your crisis, right? Here's your 2008 flashback, and everyone's selling Bitcoin. This reminds me of in 2000 at the bottom of the market, right? At the bottom of that huge crash, nobody wanted Amazon. Nobody wanted technology. If you were in internet stocks and you got laid off, you couldn't get another job because people were like, oh my God, you were in that? It's called revulsion. Revulsion is always the darkest before dawn phenomenon. Now, when you have inverted yield curves, something bad's going to happen, right? Or you're going to have a recession. And this is the most telegraphed recession ever. You know what? If you work for a Silicon Valley company and they're laying people off in 10,000 people clips, and you have a house payment that's gigantic, that is a recession. And they're probably going to let more people go. Ask somebody in New York or California. So if the recession is already here, if the Fed has already broken it, one thing that people have not asked themselves about what the Fed's going to break, what happens if the Fed breaks the U.S. Treasury? There's math out there that says we cannot pay the interest in the debt with Fed funds over 4.5%. So what happens if the crisis of confidence isn't Bitcoin? What happens if it's the dollar? You know, today's trade is, oh my God, Bitcoin. You know, there could be some massive liquidation. Like, again, we know this. There's an Elliott wave count that shows 14K Bitcoin. There's also a chart that shows 19K is great support. I'll show you both, right? But I don't think people are thinking too much about, oh, well, what's the nuts and bolts of the inflation report? No. Why are we in crypto? Has the Fed gone too far? And what does it all mean for the dollar, right? Because that's what drives crypto, right? Dollar up last year, crypto crashing because you had men behaving badly with Celsius and FTX as well. So it's funny that everybody's going to turn their back on crypto at the moment where maybe you should think about it. Oh, by the way, there's one side note in equities. How about a bottom in equities in March? If you look at like triple leverage short ETFs in the stock market, retail just can't get enough. Retail is so bearish and so short, I don't even know how the market's going to go down. I don't. And pension funds got this great idea to get rid of stocks and pile into bonds. Bonds may or may not do well, but it feels like no one owns the stock market. And I know that's crazy. People are like, oh my God, Bill, really? So what happens if stocks don't go down as much as people think, or God forbid, go up? The dollar starts to trend lower and accelerates, and everybody sold out of their crypto. What's crypto going to do when it turns? Either at 19 or 14. It's going to go straight up. You're going to have a V bottom, like all the way down and all the way back, right? So I think in crypto, it's not investment advice, but from here on out, it's about capital deployment. The eclipse in April is probably going to be a dollar problem. Now, you know, you can't make too much out of any one day, but if I had to make interesting TV today, that's what I would say.
You know, I found it, the market is so, and it's evident in the charts with the Bitcoin, Bitcoin most specifically, because it kind of hyper expresses the sentiment of the market. You know, when there's uncertainty in traditional assets like the S&P 500 or Dow Jones or the US 100 or any of those traditional indexes, the uncertainty is expressed in a depressing sort of price action within Bitcoin. When there's uncertainty in markets, then risk on is basically a no-no. And we see that in the price action with Bitcoin. But, you know, in the last about week and a half or so, 2 weeks, you know, I'm sure you follow the CME futures sort of prediction on the rate hikes that may be coming. You know, it was like 80 to 20, 25 basis points. And then you get two or three different chair spokesmen speaking, and it has just flip flop back the last few days, and now it's like yesterday it was like 70%, 50 basis point hikes, and then back today now we get the jobs numbers and it's like 50-50. If that's not an expression of the market the market has no idea what's going on because our policymakers, and I have compassion for them because I don't know how you could really navigate monetary policy after shutting the world off for, I live in New York. So when that happened, the only thing that was open in New York, the only thing that was open was pharmacies and grocery stores. It was like a ghost town here. So, the fact that people even argue whether or not we're going to go into a recession or if we're going to have it, to me, it boggles my mind. I don't want it to happen, but what I want doesn't matter to the market. It boggles my mind that people think that, because how do you shut off the world economy for months, for months, and then have no lasting impact on of course we had all the money printing. From that, we have a lot of pervasive inflation globally. It's not just the US. People in the US need to realize we have an inflation problem, but it's far better here than it is in a lot of other places with just runaway inflation. But how to contend with that? So we've talked a lot of high level stuff now. I think if you're open to it, I'd love for you to share some charts, some different things that you may be seeing. We can, of course, give some people some of your ideas on the framework of where we're at right now with this pullback on Bitcoin. And then if we want to look at Ethereum or anything else on your charts, I think the audience would love to see some of your beautiful mapped out charts there and your thoughts on what's going on with price action.
All right, I appreciate that. I'm going to share PowerPoint.
And again, that's exactly what I was about to ask. Just want to make sure everybody knows this is Bill Noble. He's a just wonderful person in the crypto ecosystem, shares so much good content on his own. He's got his own YouTube stream as well as other media outlets. So definitely make sure you can go and follow him. And I believe, if I'm not mistaken, it's is it crypto_noble? Is that your?
Yeah, it's crypto_noble on Twitter, and it's just Crypto Noble on YouTube. So that channel's 2 months old. Market update Monday through Friday. And, I'd come on this channel and do special market updates, whatever you guys need.
That's his page right there. All righty. So show us the magic, Bill. And thank you for being here, brother. I really appreciate having you on. It's been a pleasure talking with you and hearing your thoughts on the market.
Yes, and thank you for having me. Okay, so let's start with the dollar, right? DXY was down yesterday. Normally, the dollar is a safe haven currency if everything's falling apart. That did not happen yesterday. Okay, you have a new high in the dollar here, right? But you have a lower high in stochastics, bearish divergence, or like Frankie Candles calls it, bear div, right? When you have a new high in price and it's not confirmed by a momentum indicator, and that momentum indicator rolls over, you normally get a really sharp down move. This happened in Bitcoin 2 weeks ago. Okay, so if the dollar has topped and met resistance here, right, and this special oscillator from Bill Williams, when it gets close to zero, that means you can have a big move start. So there's a lot of like big move indicators going on with the dollar. Now, gold, just saying, right? Gold hits the 38% retracement, does what they often do in commodities, which is like run everybody's stops at the chart point and boom, right? So if gold is leading the way, Bitcoin can follow once the crypto carnage ends. This is gold stocks. This is GDX. All right. Interesting. Big new low. Okay. Higher low in stochastics. Like if there's no stock market calamity, wouldn't it be funny if gold stocks moved? Okay. Now let's go to Bitcoin. Two scenarios, right? 14K, new low, blah. Possible. I got another idea. What about dips in bull markets can be scary, right? Everyone thinks bull markets are a cakewalk. Like, oh yeah, it's a bull market. Just kick back and watch it go. No. Bull markets in equities, particularly like 2009, 2010, 2011, even with the printing press running, when they would drop the market, it would look like it was going to zero, called the knife experience, where you go, oh, it's the return of the bear market. It's FTX all over again. It's one way to think about it. Now, check it out. This is Bitcoin on a daily chart. This is Tom DeMark's work. He was the original quant TA. So just a common sense thing. Did you know Bitcoin has retraced 62% of its kind of move from mid-December up? Interesting, right? And this 9 means that, the trend may be exhausted short term. We don't know if it's going to be exhausted long term, but it's interesting that somebody named Oh Hey Maddie taught me that when you get a 62% retracement and it holds, it's normally good for that crypto. So is 19,800 the bottom? Well, I don't know for sure, but there's a lot of signals here that, like, if people puke this thing and gave up, this could turn around. Now, if it doesn't, it's 14K, but I don't think anybody's talking about support this morning. ETH, very similar situation, 1393, 62% retracement, right? Next candle will be that Tom DeMark signal of, okay, maybe we're going to stop for a while. Let's give crypto a chance. Let's see what happens. Now, if we're going to get, if we're going to get real, we're going to get scary, we're going to talk about DeMark's function where it has like an Elliott wave component. This may be hard to see, but you can follow the mouse. All right. Now, I originally thought that this was A, B, C done, because that's how you correct zigzag if you buy a chart book. Now, there's another way to look at this. This was the first leg down off the top from 65K. Then you had a bounce to 50. Then you had FTX and Celsius, the three wave, right? Then you had another rally. That was the 25K. Please let it be a bottom. And now, right, big trends have 5 waves. So it could be 1, 2, 3, 4, 5, right? That's like the world ending type of action. Now, if you saw 14K, there's 2 things to remember. One, you got to have dry powder to do so. So if you've done a bad trade, admit you did a bad trade, adjust your book. Okay. Now, if you've got dry powder, 19,000 is interesting. What prevents everybody, not investment advice, from like trying to grab it at 19 and putting a stop in? You get stopped out, so what? Right? You get to buy it at 14. If you don't get stopped out, right, people will say, oh, I missed 20K again. I missed 20K again. I also had 1,300. If you go back to ETH, I haven't updated the chart yet, but I had 1,300 as support on a hand-drawn Gann chart. Okay, so on my Twitter, I draw the Gann charts by hand. Really interesting that this 62% retracement at 1,380 matched up with support I had from the hand-drawn Gann charts. So what's my net takeaway? My net takeaway is this. You can have a lot of volatility in crypto next week. I'm not promising that 13,800 is the bottom, but what I am promising is that whatever the next big trade is, people are not focused on it. The next big trade is this. It's the dollar. And unless the Fed comes out and goes crazy and hikes rates to 6%, the dollar's going lower. Credibility of the US government, the ability to pass a budget is not there. So if you have a technical analyst, like everybody does TA on crypto Twitter, but when I first started in the market, technical analysts were like, they were like the secret guys in the basement. Like the fundamental guys ruled the roost, but they would always be like, hey, Bill, the market's going crazy. What do you got on the charts? Technical analyst is going to look at support and resistance and then use their imagination. So that's the market update, at least on PowerPoint. And if you want to go to do some live TA, we can try that if anybody's got requests. But, again, think about what the next trade is, because the next trade is often something that no one's thinking about.
My mic was off there for the stream. My bad, everybody. I think, Bill, you could hear me because we're on Zoom. But long story short, these down days are meant to build. They allow you to be prepared for taking profits in the bull run. The problem most people have when they enter the space is they enter when there's a big hype cycle in the market where you're getting all the news media because we're back above $60,000. And so then people believe in Bitcoin again, but they're buying from people that prepared in these accumulation zones in the bottom of bull markets. So they're buying from people taking profits. And the goal with these sorts of streams, and I think Bill would agree here, we're not doing this because we want to hear ourselves talk about the TA that we're seeing. We're trying to help prepare other people, prevent themselves from doing the pitfalls that we've had, and know how that they can build their own winning strategy, because none of this is financial advice. This is strategy. This is what I've learned. And how can you take one piece from my puzzle, one piece from Bill's puzzle, one piece from Scott Melker's puzzle, and build your own sort of data set and your own strategy so that you can dominate the market. So Bill, yeah, I'd love to continue on doing some live charts. We can, if there's any particular 2 or 3 altcoins that you've been eyeing, and kind of any direction you want to take it, I'm happy to go over any of the charts that you see, because I know all of them will be relevant.
All right. Well, I appreciate that. So let's go to, this is Bitcoin 90 minutes. Okay. So this is a 90-minute chart. Now, so let's count waves, right? You can see the little numbers here, if you can. So you had a 1 wave down. That was from 25K. So that was your blow off top. So then you went 1, and then you went 2 back up. And then you went 3 all the way down here. And then, up at 23K again, that was 4. And oh, look, crash. Sometimes final waves look like this. They go 1, 2, blah. What you see down here from DeMark is you see this could be a final 5 wave. That's a nice candlestick. And that 0 signal means, in theory, that could have been it. That could have been it. And no one wants to touch it. Okay. Now, I don't know what we're going to get. Let's go to altcoins. I was talking about getting Avalanche at 14 or somewhere in that nature. So there's support around 13 and change. DeMark stuff's pretty complicated. It was invented, with a skyscraper full of C++ programmers in the 80s, led by a guy named Tom DeMark. And he had a way of measuring when trends were going to either pause or end. Okay. So he would count a certain set of conditions, right? Like the high is higher than the high 2 days ago, something like that. It's complicated. The way traders look at it is when you see a 9, that could be a pause. When you see a 13, that could be a bottom. When you see the 2 of them together, it gets very intriguing. It could be like a tough bottom, maybe. So you got support in Avalanche, okay, at 1374, and you got another one. Again, this is all drawn by the DeMark system at 1316. Let me ask you something. Has anybody thought about the fact that Avalanche or Ethereum aren't securities, but the future of the web? Avalanche has got a partnership with Amazon. Why is everyone giving up on this? Like, let's go to Near. Okay. Now, Near protocol, 90-minute chart. Okay. There's your 13 bottom. Okay. And then typically you can get blow off bottoms. So, Near, very interesting blockchain protocol. Now look at the big picture, the old zoom out. Like, when you look at how destroyed this is, I mean, can you really tell? Can you really say that, oh yeah, let's kill it at $1.74. It used to be at 20. And again, does anybody remember Web3? Now, just for laughs, let's look at the Elliott wave on Near. Okay. So if you look at this, interestingly, right? This was the bottom with the 0. That's FTX. Then you go up, that's 1. And then you go back down, that's 2. So sometimes, right? And then you run the stops below the 62% retracement. It's not a bull market unless you can buy a dip and make money. People think this is the bull market. That's not the bull market. The bull market is if you can buy this thing after it's down only and make money. Now, if you can't, it's all going to make a new low. That's trading, right? So I'm interested in this, and I'm also interested, even though everyone hates it because of what happened with FTX, what about the Solana phone? Anybody talking about the Solana phone? 62% retracement in Solana is at 1527. Interesting, it couldn't get down there. Now, maybe it will. But nobody wanted Solana at 9. Actually, Wendy O gets credit for calling the bottom in Solana, believe it or not. But there were a lot of Solana is dead videos down here. And then, of course, everybody is like FOMOing in at the top, and then it's down only. What happens if 15 holds in Solana? And they come out with a phone where they airdrop you stuff, and the phone pays for itself. Web3. Anybody remember that? So these are the type of plays that should start coming to mind. Think of the bullish thesis when it's down only. So, I mean, we can try to do any altcoins if the audience is interested, but, you know, it's a framework. Like when you do research, like everyone says, oh, Bill's a chart expert. Let me tell you something. There's no such thing as a chart expert. When you hear somebody say
a chart experimentalist is at best is what we are.
Exactly. Right. You got to adapt all the time. Now, there are guys that are famous. There are guys that have great track records, but people at home may be saying, I can't do this. And I actually think you can, right? You know, if you look across on the chart and you see, oh, it stopped here before, well, guess what? You've already covered the first 20 pages of the chart book. Just look to the left.
Well, okay. So let me ask you a question. Let me ask you a question. Yeah. I think a lot of people would be interested in this sort of idea because I think it's very common that when people enter the crypto ecosystem, they've seen whether it's news media, a friend of a friend. This, you know, we're all aware of either a story or somebody in our circle or circle adjacent that has, you know, made life-changing, legacy-changing wealth because they got in, you know, way before we had even considered even it as an option. And so I think one of the pitfalls a lot of people fall in is they get into crypto, which is excellent to do, but I think we get into it with not knowing that we're getting into it with a greed mindset, and we don't have the tools yet to really capitalize on things in a productive manner. So people get in and they get so excited to trade that they might put in, let's say they have $10,000 or $5,000 that they're, you know, it might be all that they've saved. And they're like, you know, I'm going to drop in this 5Gs and my friend made 40 million because he got in 2011. They're not taking into consideration that's a big gap of 2011 to 2023. One, that time in the market beats timing the market any day of the week. The second thing is you don't jump in, and because you bought a crypto once, that doesn't make you a trader. And people need to know that. And because you've made one or two trades, that still doesn't make you a trader. So on that note, would you have any sort of advice or, for instance, like the most basic strategy for somebody that does want to participate in the crypto ecosystem and, let's say, trade very lightly, whether it be position trading or long-term swing trading? What's a sort of simple strategy with, you know, a free indicator setup, whether it's MACD or RSI or even just a price action? What's a sort of simple strategy? We can even just use Bitcoin and Ethereum alone to identify a likely good spot to enter towards at some point in the bear market, and how to identify towards anywhere near, you know, nobody's going to nail the top, especially if you're new. Even if you're a pro, it's a lottery if you nailed the, within $5 of the top. What's a good strategy to get somewhere near a bottom and take profit somewhere near a top? So for people that don't have the ability or the time to actively be in the charts as much as we are, because it's sickening how often you and I are probably in the charts. It's almost a OCD if we really think about how much we're looking at the charts. What's that simple strategy somebody can utilize to capitalize in the most passive way possible, getting in near-ish a good accumulation zone and trying to exit somewhere near-ish a distribution zone?
All right, so let's break it down. So you get in crypto, and the first thing you have to do is you have to put money in, right? And you have to watch your emotions. So people I'll say, I'll put $500 in Bitcoin. And they'll be like, oh, I understand it moves a lot. But if that 500 turns into 350 in 6 weeks, you're going to be shocked how upset you get. So you got to learn why crypto moves the way it does. You got to get used to how crypto moves the way it does. And you got to check your own emotions around it. Or not check it, but like observe it. That'll allow you to establish position size. Now, once you establish kind of a portfolio, you got to do active portfolio management, as you said. Plan on doing 6 trades a year. Like this hodl and forget it, that's for the super rich, right? That's for people who can just take the Bitcoin and put it in cold storage and forget it. The rest of us, mortal people, we had to do 6 trades a year, right? It's called active portfolio management. So if you think about it, you'd be like, all right, 6 times a year, I'm going to have to make an adjustment in order to not get smoked. Now, before I get into how I do that, let's talk about the 100X crowd. I went to work for a group called the Emerging Asset Group. We're trying to get commodities on the blockchain. I first heard about this. The project was worth like $100,000 or $200,000. I got in, this thing went, it went way up and then it came all the way back down. And that was the first time in 4 years that I found like the big 100X type of trade. 4 years in this business, every single day, digging in the dirt, I only found one. And I was lucky to find that.
Can I ask, finding that one, you're not going to probably know the number here, but what would you say the approximate level, number of shots you had to take to, to find that diamond in the rough? I'm sure you didn't identify the one and you nailed it. There's probably, whether it's 15, 20, or 30 different assets that you had your eyeball on and took a shot on a few of them. Some of them are zero and it's complete loss, but the one that did landed. So how do you contend with that? Do you put 25%, 25% of your portfolio, or do you have like a 5% or 2% allocation for those higher risk assets to basically manage your risk? What's your strategy there?
All right, good question. So when you're going to do a highly speculative play, you shouldn't be putting any more than 1% of your money in. And if you don't have enough money to do 1%, okay, don't put half your money in something like what came out last night, Crypto GPT, right? Came out last night, and that's all the buzz, right? You got to be careful with that. Yeah. I mean, if you're buying a narrative now, you're buying it from somebody who was investing in it 2 years ago. But back to small coins, right? I'm over the age of 30. So when I do crypto small cap, I only invest in things that I understand. Like, for example, I missed Matic at pennies because I really didn't understand what a layer 2 was. But some guys I was working with, they got it, right? And they made life-changing money, right? So it was a question of not how many times can I gamble. It was a question of what could I find that I understood, right? I was like, oh yeah. Because like in equities, it's about the story. Anybody who invests in equities, Kathy Wood's stocks and ARK took off. Most of them didn't have earnings, but they had stories. So yeah, I had to listen to projects for 3 years and almost like sit on the bench because I couldn't find something that resonated with me. If you want to play the portfolio game, you can put 1% in. Now, to answer the question about like, what's the one thing that I would look at, right, to really help me figure out how to get in and out, it's a divergence between, say, an RSI or a stochastic, right? This is a 13-day RSI, right? And I think you have to look at odd time frames like 89-minute, 4-hour, but you particularly got to keep an eye on 2-day and 3-day. I learned this from one of the best traders in crypto. So here's an example of Ethereum going up, right? And it makes a new high here, right? Okay, but the momentum indicator down below makes a lower high. Now, how do these situations normally get resolved? Well, they get resolved by very sharp down moves. Now, frequently, especially since each bar here is 3 days, these down moves can take a long time to filter out. So it's either, sometimes it's down, right? Then it's back up, and then it's down again, which is why I'm acknowledging the point that, they could blow this whole thing out. But when you see these divergences and you see that stochastic start rolling over, that's when you exit. And it was very similar in Bitcoin. Now, on the other side, I was showing you this, I believe, in the dollar, right? We were looking at the dollar, right, before. Okay, so here's the 1-day chart of the dollar live. So, you can use this on bottoms. I think I had it in GDX, but we'll just keep it relevant. So you have the dollar making a high here, and then another high there. But the momentum indicators down here made higher lows, right? And this is this active portfolio management component. In other words, you could have rid this thing all the way up here. You could have seen this new high into resistance and then been like, this looks like it's rolling over right there. And you're like, hey, I'm a little bit concerned about these divergences. I'm going to exit, raise capital, wait for the divergences to work itself out, meaning wait for these RSIs to come back down over here. Now, that can require patience, okay, which is something else you got to have, right? When you look at these divergences, right, like let's try to find a bullish one. I believe it was GDX. That's the gold stocks index. Right. Okay. So again, here's GDX, right? GDX is down only because of fear of the Fed. So gold down, stocks down, gold stocks get a double whammy. Okay. Here's the new low. Here's the higher low and momentum indicators. Now, is this just good for a pop or is this good for a bottom? Well, if you were a natural buyer of anything like an altcoin or something like that, you see these divergences, that is when you can do trades and move money around, right? Because guess what? In GDX, the same thing happened up at the top, right? You had a higher high in price and you had a lower high in the momentum indicators, indicating that this was probably a blow off top. So divergences between price and anything like a stochastic or a momentum indicator can be super helpful if you only had to do one thing.
Yeah, I mean, we have a whole indicator series that we launched here through BitLab called the BitLab Trading Stack, and the main portion of that indicator series is there's a volume component, volatility and movement component, a momentum component, and then the main component of it is called BitLab Market Intelligence, and that is it's got 9 or 10 different indicators combined within it. But what that one's predominant functionality is it allows basically pulling the BitLab Market Intelligence indicator up. it automatically reads and prints on your chart money flow index divergences, stochastics, RSI, MACD, volume. There's several more, but it's just Chaikin money flow, which gives. I mean, some people get confused that they think the flags basically that show the divergences. Sometimes you'll see a flag with 5 divergences. Some people get confused that is necessarily a buy or a sell signal, and I try to do my best to let people know these are not specific buy or sell signals, because in reality, most indicators that have a buy or a sell signal is rooted in tracking, crossing sort of moving averages, a slower moving average and a faster, basically like, whether it's a 9 and a 13 or a 12 and a 20, what you can set it how it is. But with what I like about the indicator series we do, and it lines up exactly with what you're talking about, is the best way that I've found to really catch the edge in the market is one, try to master as best possible with no indicators whatsoever, looking at the price action on a chart and understanding the momentum just by seeing the different shapes and changes in candle size going into a move. When those candle sizes, if you have green candles pushing and they're getting larger and larger, you're increasing momentum in that direction. As soon as you start to see those candles starting to diminish in size, you're getting that smaller time frame rounding top, meaning that the move in that direction is starting to lose confidence. And then you can utilize divergences, which then shows you, I sort of allude to it like a car going up a hill. If you're going up a hill and you start that hill with a full tank of gas, you're not concerned whether or not you're going to get to the top. But if you're halfway up the hill and the top of the hill, in this case with the chart, would be your target or where you want price to go. If you're looking at your gas gauge, you don't realize there's a leak in the gas tank, and there's all of a sudden you have your low fuel light flashing. You have to start sort of expecting, at least, or planning for the eventuality that you might not make it to the top of the hill because you no longer have the fuel to carry you higher. And that's essentially what I think a lot of people, I'd like a lot of more people to understand how important reading these divergences are, because you're essentially reading the gas gauge of the momentum of a market, either momentum to the upside or momentum to the downside. And they're so very useful to really not pick the exact spot it's going to flip, but it definitely will. I mean, the move that we had in early January, anybody that was looking at divergences, and 3-day chart is one of my favorite charts. Like, I look at the monthly and the weekly, but my most common chart because it kind of straddles the macro and the midterm. I like the 3-day chart is my bread and butter for really gauging what's going on within, trying to sort of forecast what's happening. And there was a bullish divergence on MACD, RSI. I mean, there were several. I mean, that was about 8 weeks or 9 weeks in the making, leading up to when all of a sudden we had that pump. People go, it came out of nowhere. Well, people that were looking at the fuel in the market, which is that money flow, which is the RSI, which is the momentum indicators like MACD, it forecasted, letting us know that the winds were starting to shift. And once the wind hits that sail and the market pumps, it's not a surprise to people that were looking at the larger time frame that then can use the smaller time frame to pick that entry. I sort of categorize it. On every stream, I go through this sort of market cycle cheat sheet, not the Wall Street market cycle cheat sheet, but this cheat sheet I sort of make where I'm outlining what an accumulation zone is. Then you have your breakout, your push, retrace, distribution top. Then you have, breaking of, a lower high and then a lower low. Then you have your downtrend, push, retrace, relief rally, push, retrace, relief rally down to your accumulation zone again. Now, that people think when we talk about market cycles, people blindly initially think we're talking about the macro market cycle. But in order to trade effectively, we have to all understand that there's going to be cycles within cycles within cycles. So knowing your macro cycle can give you an indication of what the dominant trend is. And then understanding on a midterm time frame, whether it's a daily, 12-hour, 8-hour, can give you an indication of where you're at within that larger frame. And then looking at the smaller time frame, the micro cycle, local cycle, whatever you want to call it, gives you the ammunition for where you're going to pull the trigger. And when all those things line up across multiple different cycles and multiple different indicators, all leading into that eventuality, then we have built a case for a highly probable trade. And not all of them will work out, but at least we have stacked the odds in our favor. And that, I think you would agree, that's what trading and investing in markets is all about, is it's trying to understand what the psychology of the rest of the market is, seeing how these market cycles are playing out, where we're at in a trend, and when the best spot is to pull the trigger.
Yeah, really interesting on your Twitter space yesterday. You said, or somebody said something really interesting. Step one is to look at the chart without a million indicators.
Yeah.
I remember back. Yeah. I remember back in business school, statistics professor. Right. Statistics professor walks in and he says the first rule of statistics is to plot the data. So if you can just look at the chart, right? So here's a little funny screen share, a little Wall Street war story in effect. So once upon a time, people only looked at bar charts. They only looked at bar charts. And then in 1991, I signed up for a class with this guy named Steve Nissen, who paid his own money to have the candlestick manuscripts from Japan translated into English. Candlesticks were being used by the Japanese going back to 1766 to trade their rice markets. This guy wrote this book, and I remember he starts teaching a class at the New York Institute of Finance. There was 3 people in the class. 3. This is the book that the guy wrote. Every TradingView system has candlesticks, but sometimes I wonder, do people really know what these candlesticks mean? Like, do people, when they start, know that the relationship between the open, the high, the low, and the close can have meaning? And they got to figure out what that meaning is for themselves. So this was the book that I got. He's got a follow-on book, right? The big thing is people in crypto turn to experts for research. That's great, right? Everybody's got to have something that they read. But people in crypto also, they have a lack of confidence. They don't believe that they can learn it themselves. So I've seen a lot of chart guys with a lot of complex stuff. Like, I have my complicated DeMark stuff, but I don't like using it to talk over people's heads. I don't want to have people watching my channel because they feel too stupid to look at it themselves, right? You can understand what's going on in the market. Now, can you be a psychic predictor? Like, hey, man, if I was a psychic predictor of every single thing that ever happened, we wouldn't have a green screen background. We'd have a view from my yacht, okay? Everybody's looking for the yacht. What they should be looking for is the knowledge and the confidence that you can do it yourself. And believe it or not, just to be raw, every big trader who's ever lived, the greatest traders in the world, they have 2 things in common. They have all sold the low and they have all bought the high at some point, right? It will happen to you. And if it has happened to you, F it. You bought Bitcoin at 25K. It didn't work out. Make an adjustment. You got dry powder, want to try it at 19. Maybe we try it at 19. If that doesn't work, you try it at 14, right? But most of all, have confidence that you can figure it out.
Yeah, I mean, I agree with that so wholeheartedly, and I appreciate you saying that. And one of my missions here on this channel is, the whole motif is bridging the gap from beginner to pro. And the truth is, nobody's ever a pro because the data has always changed. So you can never be a master of what the data is today because the data today has never been in the same sort of construct as it is today. So the pro side of it, I think what most people need to recognize is the pro needs to be in your ability to establish a strategy, stick to it, proof it, and when it doesn't work, learn, grow, and adapt that strategy, proof it, but always basically having a strategy, sticking to it. I have a client of mine I was talking with yesterday. He was in 2 trades. He was so excited. because it was these setups. So basically I was working with them on patience, letting the charts develop to get to a point to, you're not just taking shots because the market's moving, you get in. No, you're forecasting because the way you're looking at the chart, you've done your chart pattern analysis, you've done whatever your strategy is, whether it's TD sequential or indicators or just basic chart patterns or moment, whatever it is. But letting the chart develop and then having a plan, sticking to the plan. And when you've made money, no matter what, always move you don't need to take profit per se, but you at least at minimum need to move your stop loss into a profitable zone. So when the trade does go the opposite direction, you're no matter what going to be in profit. And essentially what happened was he did 2 trades, nailed it, did exactly what exactly what we had talked about. I was so proud of him. I got a message from him about an hour later. Damn it, I lost everything. I'm like, well, wait, what do you mean? We just spoke about this. Once you've had a trade, especially if you're not a professional trader trading all day long every day and you have another job, you don't take a trade and because you won, get euphoric and then do 4 more trades and then lose all your profits. And you also don't take a trade that you lose and then kamikaze trade, double or nothing, I'm going to win it back. Essentially what you're telling yourself is you don't deserve the profits when you're doing that because you're not sticking to your plan. You're not sticking to your strategy. And so the goal here for me, and I love having you on the show today and everything that you've said, because you're not talking over people's heads. You're talking through the experiences that you've gained, and you're doing what I appreciate so much in this space when people do this, is throwing the rope back to people, talking about high-level concepts and throwing the rope back, bringing them along so that we can all understand. Even me, I've been in the space for a long time, and I'm humbled every day. And I've learned a lot from you here today, and just your take on the market and your patient sort of outlook on how you're developing. Even honestly, me having started this YouTube channel about a month ago, we're growing rather quick, but I have a lot to learn, and I love how patiently you break down your thoughts and invite people in to listen versus just talking at them. So, I can't tell you how much I respect you and how much I appreciate having you on. We still have a few minutes left. If there's any other charts you wanted to cover, just to give people a couple more nuggets. I know some people were asking about Filecoin and Quant and also GRT or AGIX. If there's any of those that you have any interest in pulling up, or even any other coin, we can kind of wrap out with a couple little 2-3 minute technicals, looking at some levels before we wrap out the stream. Give some hope to people.
Yeah, we can do some on-demand TA. So here's Filecoin, right? Sometimes we call this altcoin overtime. All right, so Filecoin, 9 bottom on DeMark, right at the 62% retracement. So if 536 holds, you got some hope in Filecoin. Now, let's just say it's not as tidy as this. Maybe they wash it down to 468. What you want to see, if they do wash it down, is you want to see it come back above that 62% retracement, because that retracement level has served me well. Okay, QNT, Quant. Okay, very tribal following. Okay, here's Quant, right? January all the way up, 13 top. Okay, all the way back down, 13 bottom, right? With the blow off climax right to a support point, and there is your reversal candle. So is this perfect? It's not perfect, but it looks pretty cool, and it's a lot better than buying Quant up here. In other words, this has been like a level of stability for Quant, right? Like, it likes to do these sprints. But even if you go all the way back to August, let me see if I can draw this here, right? Like, I know guys like doing this with volume histograms, and that stuff's really cool. I like it. But if you don't have a volume histogram or you don't understand it, QNT has spent a lot of time, inside this $100 range. So could this blow out and make a new low? Anything can blow out and make a new low. But you have to start asking yourself, what happens if it holds? And is it worth it to try to take a trade? Or let's put it this way. Let's say you're hodling quant. You're like, oh my God, should I puke it out? Okay. I can't give you investment advice, but that's a support point, and that's a very interesting candlestick. Now, I know everybody likes XRP, so we'll put XRP up. Okay, here's a 4-hour chart. There's a very important lesson from XRP. So here's the government losing in court. That's what this up only was in XRP, right? Grayscale, the judge laughed the SEC out of court, trying to tell the judge that there was a difference between the price of Bitcoin futures and Bitcoin. So XRP went up, and then XRP turned around and went down. Why? Because people were celebrating relative outperformance, right? When you have something going up as everything else is going down, eventually there's kind of a catch-up trade. There's a catch-up trade. Okay, ICP. I know this is a very popular coin, right? So you had a 9 bottom here and a blow off top. Now you've got another 9 bottom, and this is, we talk about data dependent in fundamentals. Kind of gave those guys a little bit of a hard time. They could turn around and give me a hard time about level dependent. Okay. It's not a bull market unless you can buy a dip and make money. So if ICP comes back above this DeMark point at 492, even if it came back above it and sort of sat there, that'd be great. Now, if ICP comes back up, hits this point and fails, then you have to react. You have to react. But again, on a bigger picture basis, if you look at this down move, it could be an opportunity, because I have this little silly saying that some people like. I made a living with it in 2020. It's called, the bigger the base, the higher into space, right? In other words, in ICP, in NEAR, in all these altcoins, right? Even if they went down here and made a low or tacked a low or made a new low, this is a base. And sometimes when you leave the base, okay, you go up the same way you went down, right? It's like high school physics, speed, magnitude, and direction. You go down, you base, you make the base, and then you go higher in the space. So I'm not peddling bullish Kool-Aid. I can acknowledge downside risks. You have to watch your levels. You got to look at, your fib retracements. But really, folks, the most important thing to remember is that the next generation of the internet, the next generation of technology investing, the next generation of the future of money and real returns is probably in digital assets. So if you can keep from getting killed and you have the necessary capital, right? You got to have 2 things to make money. You got to have capital to invest, and you've got to have the sanity to be able to put up with the volatility. So if you look at the ICP chart, you say, okay, this is probably a base, all right? And then I'm going to try to pick a spot. Maybe this is the spot. Okay, if you go back to the DeMark work, it could be. The other thing about the DeMark work is this could be a pause in the trend, and there could be more of this next week on the downside. You don't know. Okay, I'm inclined to give it a chance because of my view on the dollar. Okay, now let's try maybe one more coin. Okay, now this is the coin I love to hate, Matic. Okay, I didn't have a particularly good experience with Matic. Okay, so I'm like, to hell with this. That's kind of where I was up here. Very interesting, just as a point of information. Matic was mooning off Disney news. Note that it was a 5-wave top, and Polygon actually started this down trade by laying off 20% of its staff when everybody thought it was the greatest thing ever. Now, this is a 9 bottom and a good-looking reversal. One thing you need to know about reversals is, oh, it's a beautiful green candle. Amazing. The key to reversals that Steve Nissen will tell you is, do you get follow through? So it's not good enough to come all the way down and all the way back. That's good, particularly if you're in a forced selling environment. But you want to see bulls willing to pay higher prices. Now, it's not personally my favorite coin. I was talking about 74 or 82. So if you don't get follow through on some of these bounces, that should tell you something. Okay. So it's a little bit of a candlestick lesson using Matic and being intellectually honest and saying, frankly, there are some coins you like and some coins you don't.
Man, this has just been such a wonderful masterclass here, sharing this time with you and you here with the community. I really appreciate your time. We're going to be having to wrap this up. I look forward to having you back on. I hope we can do this again. I know the community, I've been watching chat. Everybody's been really loving, your whole take on the whole way you break down your thoughts on this, because for anybody that's frustrated looking at the markets are frustrating, and it takes a methodical, slow-paced approach to break down different data points and try to find correlations. But not only do that, try to find things that disprove your thesis. Otherwise, you're going to end up wrecking yourself all the time. And I learned a lot here today with you, Bill. I appreciate it. We're going to have to wrap this up. We've got to throw it over to the BitBoy stream here in a little bit for all the news. But I do want to say, hey, we've had quite a strong concurrent viewership. We've only got 144 likes. So if you're in here, if you're appreciating crypto content and you're liking what's going on, not just on this channel, if you want the crypto ecosystem to succeed, make sure you hit that like button, you hit that subscribe button, ding that bell, and then make sure that you go over to Mr. Bill Noble's Twitter. Follow him right here at @crypto_noble. This is where you can find out more information on Bill. And again, Bill, I really appreciate you being here. If you have any final words or any final thoughts of encouragement before we wrap it out, we'll do that, and then we'll cut the show.
Okay, don't forget that crypto means freedom. Okay, one of the best reasons to preserve capital and trade intelligently is you want to make sure that you can participate in something that makes you free. Notice how the government's been coming after crypto this week. Crypto is freedom, and staying in crypto is more important than you think. Yeah, it's great if you can catch 100x, but it's even better to be free. Crypto_noble on YouTube. And I really appreciate you letting me be here. I do TA for you guys any day.
Yeah, well, maybe we'll make it a regular thing, whether it's a weekly or a bi-weekly or something. But I'll shoot you a DM. We'll talk off stream. And again, everybody, hit that like button for Mr. Bill Noble here. He dropped us so much alpha and such a wonderful sort of context on the entire, not only ecosystem, but also what's going on with the stars. We got the whole shebang today. So really appreciate you again, Bill, and everybody in the chat. Shout out to you for being here. All the mods that are always doing all the work, keeping things moving forward. I really appreciate you all. I hope you all have a wonderful weekend. You know, my birthday was yesterday, so I'm going to be taking time off the charts this weekend. I've already done the DCAs I've wanted to do. So big shout to everybody that's here. I really appreciate you all. Smash that like button on the way out. Again, my name's Kelly Kellam. Thank you for being here. And I hope to see you again. This is what we're doing. We're building this community. So big love to everybody, and adios. Adios, muchachos. Thank you for coming. Thank you for being here again. Adios, muchachos. Thank you for coming. Hope to see you again and again.